So, you want to invest. You got a little bit of money saved up from your part-time job at Starbucks and you're ready to get into the stock market. You've watched enough YouTube videos to think you're ready to options trade on Robinhood to make millions in a day. But coming from somebody who's been in the stock market for a while, I'm going to give you the do's and don'ts if you actually want to make money to build long-term wealth. Let's get into it. So, if you're watching this video, I'm going to assume you like money. And if you like money, that means you want to make more money. But there's this thing called inflation that makes your money less valuable over time. Say you have £1,000 saved up and you want to buy a laptop that costs £1,000, but you wait 2 years because your laptop's still working. And then when you go to buy that laptop in 2 years, it's now worth $1,200. You haven't lost any money, but the value of the money you have has decreased. That's what inflation is. So how can we stop inflation? Well, the answer is investing. The basic idea is you want your money to grow more than inflation deteriorates it. So say inflation is 2%. You want your money to be growing by at least 2% a year to counter inflation. And the wider this difference gets means the more money you'll be making. And the more money you have to benefit from these gains means you exponentially get more money as you invest. This is a concept known as compound interest. I have a calculator here that can show us what compound interest does in real time. So let's say you put £200 away every month into the stock market, and the stock market returns an average of 8% per year. This means in roughly 40 years, you will be a millionaire. Sounds appealing, right? Well, let me show you how it's done. Buying a stock in a company is basically buying a percentage of the company. You are now a shareholder, and this means you benefit from a company doing well. So the two ways you make money as a shareholder is one, by having the value of your share increase. So say your stock is worth 100. If the company makes 10% growth in that year, by the end of the year, your stock is now worth £110. This means you can sell it for a profit of £10, which is called capital gain. And if you hold on to that stock for long enough, you could make massive amounts of money. The second way that you can make money from stocks is dividends. Companies have excess profit at the end of the year, and some of them give it back to their shareholders in the form of a dividend. So for the percentage amount of the company that you have invested in, you get that back as a percentage of the excess profits. So say a company is giving 2% of its profits away to shareholders, and say that 2% is worth $1 million. This means if you hold 1% of that company's stock, you will be making £10,000 that year, which is pretty good. So now that you know how stocks work, where do you invest your money? There are a couple really good platforms that I would recommend. For US customers, Robinhood is good. For UK, Trading 212. And there's also a lot more that you can choose from, as well as like Public and a lot of ETFs and index funds that are very good. So when you're setting up an account on one of these platforms, you want to make sure you're picking the right holding for your investment. And I would choose the tax-free account that most countries have. It has different names for each country, but I'm sure your country will have some sort of tax-free ISA. So for the UK, it's called an ISA. For the US, it's called a Roth IRA. For Canada, it's a TFSA. And for Australia, it's called Supers. So try and figure out what the tax-free equivalent is in your country and get that. When you sell a stock, you usually have to pay some sort of tax on it. But this sort of account means that if you sell your stock for a 10% capital gain or a 10,000% capital gain, you get to keep all of the money because it's tax-free. The only limit is you're only allowed to deposit a certain amount each tax year. But if you're only depositing a few £100s a month, this really shouldn't matter. Platforms like Trading 212, Robinhood, and all of these ones give you the option to do fractional trades. In the old days, if you wanted to buy a share of a company, you had to buy the value outright. So say you wanted to buy Apple right now, the stock is averaging about £200. So you would have to pay £200 just to own a share in Apple. But nowadays you can do fractional buying, which means you can invest as little as £1 into Apple and still own the stock. This is really good if you want to test your feet in investing, or you don't have a lot of money to invest to begin with, because this means you can still pick the best companies to invest in, but you don't have to splurge out and buy individual shares of each company. The platform I use regularly is Trading 212, and I've left a link in the description to give you and me a free stock if you sign up using that link. So why wouldn't you want a free share? If you want to start investing, sign up to Trading 212 now using that link, and we can both benefit. So now that you know which account you should be buying, when should you start investing? Well, obviously, sooner the better for the compound interest I mentioned at the start of the video. But there are a few things you need to do before you start investing. The first thing is you need to eliminate debts. If you're making 8% gains on your investment, but your debt takes away 20%, you're negative 12% in debt still. So by getting rid of your debt, it means you can actually focus on the gains you're getting from investments. So really focus on paying off all of your debts first before you even consider investing. The second thing is you need an emergency fund. Usually an emergency fund is 3 to 6 months worth of living expenses. So as soon as you have that saved up, it means that if any emergency occurs, you don't have to sell your stocks to fund the emergency, which means the compound interest can keep generating and you're not losing out on potential value that your investments might deliver. Now, you've got your free stock, you know what account you have to open, so what stocks are we actually going to buy? In my opinion, buying individual stocks is very risky if you don't know what you're doing. Even registered financial advisors still get it wrong sometimes, so you're very unlikely to beat the market. What I would suggest for new-time traders who want to grow long-term wealth so they can retire in luxury is use index funds. Index funds are a compounded selection of the biggest companies in the world, which means that it's very stable because a lot of these companies are not going to go under. And if all of these companies go under, you've got a lot more to worry about than your investments, I can tell you that much. These index funds have consistently outperformed a lot of financial advisors. It's a very safe place to invest your money. It may take a bit of time to see any substantial growth, but I promise you it's a lot better than picking stocks. But if you're still feeling risky and you want to trade individual stocks, I'll give you some advice from somebody who's done it. What I always look for in good stocks to buy is it future-proof? Is the company gonna be relevant in 30, 40, 50 years time? For example, Amazon. It's huge, everybody uses it, people are always going to want stuff being delivered, so it's always going to be relevant. So Amazon is definitely a stock that would be very good for investing in. However, a stock like back in the day, Blockbuster, would be bad because their whole business model was on DVDs, and even when DVDs were being phased out for streaming, they still thought their business would work, but they're just not future-proof. So you really got to look deep into the future and see if this company is still going to be around and is still going to be a major player. The second thing I always look at is leadership. Is the company's leaders taking it in the right direction? Are they being passive with the company, or are they building it to be sustainable in the future? One company that really bothers me like this is IBM. IBM is a tech giant, and it's basically past the point of failing now. But they do not push innovation, and they've fallen behind tech companies so much they are not a good investment. They may be huge, but they're not doing anything that's shaking up the industry, so they're not going to grow anytime soon. So you really got to think about which companies are going to survive and which companies are going to survive and grow, because that's what we're looking for in investments. So now that you've bought your stocks, now that you're in index funds, now that you've got that free stock from the link, when should we sell? Well, the simple answer is you should never sell, because if you sell the stock, you're still missing out on growth. You should really be saving it until your retirement, and then even then only selling when you need it. However, I can think of two options when you would want to sell a stock. The first one is a financial emergency. But if you've been following the video correctly, you should have that 3 to 6 month emergency fund saved up so you don't have to sell your stocks. The second reason I would sell a stock is if it's performing badly. A way to figure out if a stock is performing badly is to look at the industry. If your stock is shrinking and decreasing in value while the industry is growing, this could be a sign that you've got a bad stock in your portfolio. However, if your stock is shrinking while the whole industry is shrinking, that's more of an industry problem and your stock is probably okay. But you really need to be looking at this in monthly or yearly basis, because a lot of companies, even the biggest in the world, can have dips in their value. So do not panic sell and just see what the trends are like in a monthly basis. Investment is a risk, as is everything. But the bigger risk is not taking any risk at all. So invest, see what it's like. You can put a little bit in at the start, just test the waters, see how it feels. Use that link in my description to get a free stock, and I hope you invest for the long term and we can all become millionaires. But anyway, thank you for watching. Go to my Buy Me a Coffee page if you would like to support the channel. I would really appreciate it. It would really help me out. But if you are investing all your money and you don't have the financials to support me, that is absolutely fine. Just subscribe and always remember, take one step a day and your life will change. See you all in the next video. Thanks for watching.